Let's be honest, folks, deciding between saving for retirement and succumbing to the siren song of just one more episode on Netflix is a struggle we've all faced. Picking a stock? Even harder. It's like trying to choose a favorite child, except all your children are publicly traded companies with wildly fluctuating values. But fear not, dear viewers, because today we're diving headfirst into the bargain bin of Wall Street. We're talking about affordable stocks, yes, they exist, that actually pay you to own them. Dividends, people. It's like finding a $20 bill in your old jeans, except instead of buying questionable gas station sushi, you're building a financial future. First up on our discount buffet line is Granite Ridge Resources Inc. ticker, GRNT, currently trading for less than $10 a share. That's right, for the price of a coffee that requires a postgraduate degree to order, you could be the proud owner of a piece of this oil and gas exploration firm. Granite Ridge is a good example of how small-cap production companies can be quite generous when energy markets align with their business models. GRNT owns a portfolio of wells and acreage across the Permian Basin, one of the highest-yielding oil fields in the United States. With crude oil at around $80 a barrel, this business has been quite good lately. The challenge for investors, of course, is whether oil prices remain strong enough to support the share price and dividend going forward. That said, the company has paid 4 consecutive dividends of 11 cents each. Good for an impressive yield, considering it remains a cheap stock under $7 a share right now. So even if things don't improve markedly, this could be a way to generate income as you wait, regardless of whether there's upside in the oil patch. It's like being the cool rich uncle everyone hits up for a loan, except instead of awkward family reunions you get quarterly dividend check. Next up on our value menu of investments, we have LXP Industrial Trust ticker, LXP. Like many real estate investment trusts, or REITs, LXP is a great dividend investment because this special class of corporation has to deliver at least 90% of its taxable income back to shareholders. That adds up to a generous income stream. That cash flow is very reliable too, as LXP primarily owns nearly 55 million square feet of single-tenant industrial properties such as warehouses with e-commerce, KingAmazon.com Inc., AMZN, as its top lessee. While there is a lot of turmoil in the real estate space given the work-from-home revolution and its impact on commercial office properties, the industrial nature of LXP makes it a bit more reliable. With a nearly 6% dividend, you won't be skimping on yield in this cheap stock either. Hold on to your hats, folks, because our next contender is hotter than a jalapeno popper fresh out the air fryer. It's Medical Properties Trust ticker, MPW. And guess what? Before you click away faster than a teenager hides their browser history, hear me out. Let's cut to the chase. Medical Properties is a cheap stock for good reason, as the healthcare-focused real estate company has been in a tailspin thanks to the growing pressures caused by higher interest rates. Making matters worse, it just saw its largest tenant file for bankruptcy too. MPW has a lot of valuable assets, which is the good thing, but fundamentally the company is in the business of owning hospitals to rent them out, not operate them. So if it's hard to finance new buildings and its renters in existing facilities aren't performing as they should, that puts MPW in a heck of a pickle. The prior dividend payments were already reduced from 29 cents per share to 15 cents per share, but the recent dive in shares has lifted the payout to double digits all the same. There's no guarantee another cut isn't ahead, but as of right now, the company is among the best-paying real estate plays on Wall Street. Hold on to your flip phones because our next stock is here to brighten up your portfolio without draining your battery life. It's NatWest Group plc ticker, NWG, formerly known as the Royal Bank of Scotland, with a history dating back to before the US declared its independence. NatWest is a major financial institution that does business across the UK and Europe. The bank makes its money through familiar offerings like mortgage lending, business banking, and investment services. This institution is analogous in many ways to more familiar domestic companies. It's a bit larger than leading regional bank Fifth Third Bancorp, FITB by way of comparison, but it offers a single-digit share price and a generous and sustainable dividend. If you don't mind banking on a stock across the Atlantic, NWG is a cheap stock with a high dividend that's worth considering. Fasten your seatbelts, folks, because our next stock is about to take you on a wild ride through the world of high-yield investments. It's Prospect Capital Corp. Ticker, PSEC. Prospect Capital is a business development corporation, or BDC, that derives profits from its investment portfolio. PSEC's investments tend to be focused on later-stage opportunities, including leveraged buyouts and restructurings, along with middle-market companies with growth potential. Since a lot of that activity relies on borrowing, however, PSEC has been under pressure in the last 2 years or so. But with more than 35 years of experience, a track record of more than 400 investments funded and assets valued at about $8 billion, this BDC is a unique way to play the upside opportunities on Wall Street. It's also worth noting that even though its borrowing costs are higher these days, Prospect continues to share the wealth via a generous dividend of 6 cents per month that it has paid since 2017. Hold on to your appetites, folks, because our next stock is tastier than a 5-star meal. It's Telefonica SA ticker. TEF Madrid-based Telefonica provides telecom service in Europe and across Latin America. This latter business is what sets TF apart from domestic wireless carriers, as its mobile data arm is adding subscribers regularly in emerging markets, even as more mature Western countries are already fully saturated. The firm operates in 17 countries, boasting about 343 million customers who provide a strong foundation for regular dividends via recurring monthly bills. One thing to consider, however, is that this European company pays on a semi-annual schedule, once in June and once in December. However, the annualized dividend still puts this stock on par with the most generous of domestic telecoms. Get ready for the grand finale, folks, because our last stock is about to hit you with a double feature of value and dividends. It's Valley National Bancorp, ticker VLY. And for a limited time only, you can snag this cinematic masterpiece for less than the price of 2 movie tickets. The regional banking sector was gutted last year in the wake of the failures of First Republic and Silicon Valley Bank. But while SVB went down as the second largest bank failure in history, and the largest since the dark days of the global financial crisis, there have only been 4 other bank failures since the predictions of broader trouble first hit Wall Street in early 2023. Granted, VLY is smaller and less capitalized than other names in the sector. It's also universally true that these kinds of bank failures are brought on by a crisis of confidence, as negativity causes depositors to jump ship rather than hard dollars and cents on a balance sheet. But though shares are choppy, the 11-cent quarterly dividend remains less than half of projected earnings. So this risky but high-yield bank stock may continue to pay off for dividend investors who can ride out current challenges. So there you have it, folks. 7 high-dividend stocks, all priced lower than a $10 bill that's been through the wash one too many times. Remember, investing doesn't have to be as intimidating as trying to understand the plot of Tenet. It can be as fun and rewarding as browsing your favorite online store, except instead of buyer's remorse, you might end up with a portfolio that would make Warren Buffett jealous. Now, if you'll excuse me, I have a sudden urge to invest in gummy vitamins and bedazzled phone cases. Don't forget to like, subscribe, and let me know in the comments which of these bargain stocks you're most excited about. Until next time, happy investing.